If you've been following our MACD series, you now understand the core mechanics and advanced signals. But let's take it even farther. In this final part, we re-stripping away the clutter and going into what really separates pros from retail traders, MACD plus price action mastery. Here's the truth. Indicators don't predict price. Price predicts indicators. MACD is powerful, but on its own, it's a reflection of what price has already done. So the real edge comes from first understanding what price is telling you, then letting MACD confirm the story. Let's start with the foundation. Market structure. Before you even glance at MACD, ask, are we in a trend or range? Are we printing higher highs and higher lows? Or key support? Resistance zones holding? Price action gives you the context. MAC gives you the conviction. Let me walk you through a clean example. Let's say GBP USD is in an uptrend on the 4-hour chart. You spot a pullback. Price forms a bullish pin bar at a key support zone. Now you switch to the 1-hour chart. And here's what you see. MACD line just crossed above the signal line. Histogram flipped positive, and price breaks the previous candle's high. That's not just a signal. That's confluence. Price action said, buyers are defending. MACD said, momentum is shifting. Your entry is no longer a guess. It's structured. Now flip it. Let's say your USD is in a downtrend. On the daily chart, you see price consolidating near a broken support, now acting as resistance. Suddenly, MACD shows bearish divergence on the 4-hour. Price makes a slightly higher high, but MACD makes a lower high. You drop to 1-hour and see a bearish engulfing candle. Volume spikes. That's your setup. You're not reacting to one tool. You're reading the entire story. Now here's a critical tactic. MACD for fake-out protection. Price action often shows breakout patterns, like triangles or flags, but many of them fail. One way to filter noise, use MACD's zero line. Price breaks a resistance line, but MACD is still below zero. Momentum hasn't confirmed. The breakout is likely a trap. But if the breakout happens and MACD also crosses above the zero line, the move is likely real, and you now have both price structure plus momentum aligned. Another high probability combo, MACD plus break entry test strategy. Here's how it works. Price breaks a trend line or resistance level, pulls back for a retest MACD histogram, begins to build in the breakout direction. Entry on retest rejection candle. Now MACD is not your entry tool. It's your momentum validator. It tells you, yes, this breakout has fuel. Even when trading without indicators on your charts, MACD can be your off-screen validator. Many price action traders keep their charts clean. No clutter. But before entering, they check MACD in the background as a final filter. If price structure says go and MACD agrees, the odds just improved. Let's summarize the golden logic. Price gives you context. MACD gives you confidence. Confluence gives you consistency. When you stop chasing signals and start reading structure, your trades become decisions, not reactions. And this is the level we trade at inside Innohedge. If you're ready to apply MACD in real strategy builds, not theory, if you want to combine it with breakout setups, reversal zones, Fibonacci traps, and raw price action, then you're ready for the next level. Join Innohedge today. Inside, you'll get real case studies of MACD plus structured trades, step-by-step breakdowns of chart entries, access to our MACD mastery track, and weekly strategy calls where we decode setups live. We don't just teach indicators, we build systems. Systems that are tested, precise, and adaptable to real markets. No more guessing. No more random entries. Only structured trading. With Edge. Join Innohedge and trade the smart way.